How's it going, traders? The markets are in a dive, and this begs the question, when are we coming up for air? Or did the markets hop in a submarine and say we don't have to? Well, luckily for you, even if they were in a submarine, I'd be able to detect them because my last name's Radar. See what I did there? See what I did? Hey, and if you stayed for the whole video, I was able to hit a big trade today off one of our scenarios that we mapped out. Alright, and catching up, what happened today and what can we carry into tomorrow? Well, today, again, we were betting on the break of this red zone. Now, a lot of you guys were probably like, hey, that's magic. How did you get that zone? Well, the more time you touch a zone, remember our watering hole principle, the more time you touch a liquidity zone, the faster it's drained. The more it's drained and the weaker it is in the future. So we had already touched this level 3 times in the past, and coming into it, we touched it a 4th. And that weak bounce right there definitely gave us a sign, yep, we're smashing right through this. Again, can't stress that principle enough, guys. The more times you touch a zone, the more you want to punch through it. A lot of retail gets that wrong and thinks the more times you touch it, the stronger it is. Don't get confused. Okay, but that's what did happen. What about what will happen, Rader? Well, of course, looking at our predictive SPY chart, we have 3 main scenarios that we want to play out tomorrow, with 3 of the main levels still in play. The first scenario is this green line, which again is betting on a gap up above this 406 level, which we can expect a rally from. If that happens again, we're looking short off this diagonal zone around 408 over here, which is the bottom of this parallel over here. Scenario 2 is this gold line. If we do push up through it intraday and chop on here, again, bet on the rally because the same principle applies. Once you come back into that resistance, we've already touched it a lot. This zone is pretty neutral. So if we chop here, that means new liquidity was injected here and we can expect a break. And our bearish scenario we've been talking about a lot lately was the 402 liquidation. Tomorrow we do expect a lot of chop in general, so don't try to go crazy on either side. But in the macro perspective, we want to see that liquidation into 402 and then that route. It's important to know that volatility is picking up, guys, so no matter what direction you go, you want to be playing both directions. So as the ranges open up, you need to be covered. And that's where the rotations and option flow come in, and I'll get you guys the trades, so let's break it down. Alright, and checking out the trades, where is big money moving into and out of, and of course, where are the trade ideas? Well, I'm looking at the S&P 500 sectors right here, and what I'm noticing, a common theme recently, and we've talked about this a lot, is that there's not a lot. Typically, these rotations really start to pick up in May, so I'm excited if you guys stay around because these will start to catch fire. But in this transitional period where markets are transitioning from tight ranges to bigger ranges, you often see money just dump into growth or value. However, looking at the industries we talked about yesterday, that softwares like DDOG, CRM, or Salesforce are really good options to long. We saw this today as they got a huge boost from that Microsoft pump, and there was a lot of strength. But other than that, guys, look at softwares, look at energy. These are the names that are on fire recently. All right, and looking at the option flow, if you guys are new here, I scan for option flow every single night with my mentors, and of course, find you the best, highest edge trades that are available right now. And through our somewhat complex criteria as well as critical thinking, we find you trades like XOM. This guy is a 120 call, 505. He's down around 47%. And again, if you are new here, we like to enter at these traders' max pain points. And these are typically between 60 and 70% off the contracts that we're watching. And this guy right here, he did enter calls right around here. He did catch the breakout, but like we discussed, unless if it broke that high, it's very concerning. So the fact that we didn't break that high is why we're getting that pushback. So I'll be looking for XOM. Again, we have plenty of time until May 5th to catch these contracts on a new low down here below this wick over here. So if we can come down here, possibly make a new low here, I'll actually shoot for the May 19th call, so I give myself that room in case we go for that breakout. All right, and why we watch those ones, the RTX and NSC. Now, you probably heard me talk about these ones were high confidence. RTX and NSC are both government defense names. And if you're new, once again, we look for complementary trades. When we see flow traders go for the same sector or industry with 2 different names, it shows a lot of confidence, right? Because they could have just got one. But unfortunately, these dumped against us. I did lose this position. This was an L. Give me the L. Bang, right there. That was a big L. However, we take these and we move on to the next one. And next up, Win and MGM. These are the double stooges here. These were the guys that were betting on the breakout. The Win guy, again, they were basically the same setup. They bought at the highs here. Algos drive it against the calls, and we do want to pick these up. probably on a new low here, but try to get this in anticipation that this will break the high. Same thing with MGM. These guys aren't discounted enough, but again, it's the same dang play here. He went for the high. He got clapped by the algos. Remember, algos will push against these big call orders like this, and we want to pick it up at a low down here. But the important thing is to never buy calls on something like this where things aren't slowing down. This is not slowing down, and the momentum is still to the downside. So until it starts to form a parallel, a trending parallel like this, it's not slowing down. But again, we'll be patient on those. They're only down 50%, and these are for May 19th, so plenty of time. And next up, RRC and W. Now, RRC was an interesting one. He does look like he's up around 30% on these, and these were the RRC puts. And we talked about whenever a stock drops in the middle of a range like this and then slightly pops, this is called a pivot level, right? And why? Because they either have to take it to the high or take it to the low. So there's not much more that the market makers can do for this guy. It's either he's going to play out instantly or not. So what we're going to watch out for is if we do pump up one more time, then we'll look for that extended drop down. If this keeps going in his favor, we're just not going to care about it anymore. Because again, the theme is getting these at a discount. It minimizes risk. All right, now the W trade, the Wayfair. This guy was an absolute meme, but we were watching it just to show you guys how this stuff can play out. But the only favorable thing here is that it is forming a parallel. And we like to see parallels because especially coming off of a low like this, it normally means that it's going to sometime come back low and smash through it. So if this can pop, make a new high possibly, and then drop, that's where we're going to try to enter on that pop. But until then, good luck Wayfair. Now the next one is BSX, the $50 put. This is for $5.19. We have plenty of time on this, but again, we love this kind of setup when guys buy right here. He bought right here. Again, why is this aggressive? Why do we like this trade? Well, we like confident and aggressive flow trades because they're taking elevated risk. And when you take elevated risk, you're putting your money where your mouth is. And that's where we like to see edge in. Even after such a big move like this, he's saying, okay, I think this is going down. So if we want this, we want it at a discount. I say come out and take the highs here, and we'll come take it around 54 to 53. All right, same kind of story, TGTX. Now this is actually the opposite case. Why is this aggressive for getting calls here after going up? Well, because it went up that much, and he's getting calls right at the highs. This is really aggressive. What really happens after a pickup like this is you often get a drop and you get another pickup. So we're going to watch for this one to continue to drop, maybe down into this expansion zone between 19 and 17, and we're going to look to pick it up off of that. And lastly, IWM and CMCSA. Now, if you guys remember from last episode, the IWM, why did we like this one so much? Well, this guy hammered the 177 strikes, and if you look at this right here, he also got the TZA. Now, why does this matter? Remember, TZA is the 3x bear leverage for IWM, and that means when this stock is going up, it means IWM is going down. So this is a great way to time market move. And this is what I mentioned, sometimes it gets a little complex reading flow, but whenever you see a guy like this get TZA and IWM, it's telling us that he's trying to time it. It tells us he's getting downside coverage now in hopes that there is a shorter term bounce. And this is likely that 402 bottom. But the way we time it is we get it at max pain, so we're going to time it with TZA. And we said whenever TZA hits that $36 area, we're going to be looking to get these calls on IWM. And we're almost there. We're so close, guys. Just come up here, maybe get that chop, and then we're going to enter these IWM calls for May 5th, not the 1st. Because he put so much money on these, we're going to wait for them to expire to then free up the options chains and have the market makers favor us. I know, a little complex, but stay with me, stay with my brain. Rader's brain runs wild. But of course, if you do want to learn it, hey, come hang out in the Discord, guys. We'll love to teach you. But yeah, we'll be watching those. So when TZA hits that $36 mark, we're going to get those IWM calls. However, the CMCSA, this Comcast guy, why was this trade aggressive? Well, look at this. He got 200K. Now, typically, we like over 300K, so that's a point docs from this. However, 40-cent contracts for 428 is super aggressive, especially when you take in consideration the setup. He's buying on a straight drop, which shows us he's confident in something. So this is a classic discount trade. We're going to day trade this guy. And whenever this guy gets wrecked and we come into a classic zone like this liquidity zone down here, I will look to buy calls. But remember, guys, I want you to know that I never get these cheap contracts. I always try to follow with at least $1 contracts. And I'll often even get one expiration out for safety. So if he gets the 37.5s for 40 cents, I might get the next expiration for the $36 calls for around $1. But other than that, guys, expect chop tomorrow. Don't get caught on one side, all in calls, all inputs. play both sides. This is going to be the theme opening up over the next few weeks, and it will reward you handsomely. Even if the markets are pumping, it's important to have coverage on both sides. And that's where the option flow comes in, because it will give you that option. In market times like this, sometimes I'll get puts on a stock and it will drop completely, and my calls will also be up the next day. So make sure you stick around so I can inform you guys on those trades. If you haven't already subscribed, it would make my day. And of course, stay happy, stay humble, stay healthy. I'll see you guys in the order books this week, and Rader.
I never switch sides, like even when I die, I'ma ride for the squad. Let of ties in the hearse. I've been on the vibe, kinda hard to describe. I'm in between, I'm good and it's fine, but I'm tired of the grind. Then I come alive in the night to realize I'm in the